So hi everyone, welcome to session of our web series Fireside Chat with Champions, in which we interview global business leaders, asking them crowdsourced questions relevant to biggest challenge we face today, COVID-19 and its impact on various aspects of business and the way we steer ourselves in these current uncertainties. Today we have a special guest with us, Minoush Abdel-Meguid. Minoush is the Managing Director and Co-Founder of Union Capital Partners, the Investment Manager for Union Capital Private Equity, one of the Egypt's first SME focused on private equity funds. She leads the investment management team of Union Capital and also works on post-acquisition value creation. She serves on board of several investments as well as their executive committees. She has worked on the booking and managing of the investment undertaken by Union Capital, including major restructuring and turnout of several of them. Minoush has been on the Forbes list of the most powerful women in Africa since 2011 because of a strong commitment to bring about change in field of investment and entrepreneurship in Egypt. She was selected by the World Economic Forum as a Young Global Leader class of 2015 and serves as an active member among the WEF and YGL Global Community and various initiatives. She has been selected by the Paris-based French Institute Social among the 100 future leaders of Africa continent for year 2014 and 15, and was among the top 15 most powerful women contributing to the Egyptian economy in 2015 by Amival El Gad. She was also selected Young Achiever of the Year by the Global Leadership Congress in 2015. Thanks, Munish, for accepting our invitation. I would request you to let our viewers know a bit more about you and your current business interests and activities. Floor is for you, Munish.
Thank you so much, Deepak. I'm actually here in my house in Cairo, Egypt. It's Friday here in Cairo, and it's just the first week of the month of Ramadan, where, as you well know, Muslims fast until sunset. So please don't mind if my concentration is not 100% because of lack of caffeine, but I will try to do my best and provide all the insights that are needed with regards to the questions that you will be throwing at me. Well, I started my career over 20 years ago as an investment banker with one of the leading local financial institutions and corporate and investment banks in Egypt, Commercial International Bank, currently one of actually the leading commercial banks in the entire region. And after spending 3 years with them attending the credit course, I joined Goldman Sachs International in London within their investment banking division, focusing primarily on European M&A. And then I came back to Egypt, and I joined HSBC. I worked with them within their investment banking operations in Cairo, Egypt for close to 5 years. And then I moved to Citibank, and I was a resident vice president working within the corporate finance division covering North Africa and the Levant region. And in 2006, I decided to be part of the Egyptian government and joined the regulator, the Financial Services Authority. I was assistant to the chairman of the FRA. Back then it was called the Capital Market Authority, the CMA, and I headed the corporate finance, and I was leading the team of introducing several major regulatory reforms to the regulations and the laws covering capital markets in Egypt, in particular the introduction of the first takeover code in the entire region and in Egypt, of course. And then after that, with the chairman of the FRA, we co-founded Union Capital in 2008 to focus primarily on SMEs, which lacked extensive access to finance in particular and attention. The company was founded a couple of weeks just before the collapse of Lehman Brothers and the global financial crisis in 2008. And since the beginning of 2008, the majority of transactions whether investment banking, transactions, M&A, or the booking of private equity investments were basically mega transactions. There were large tickets. No one was focusing on SME. No one was providing investments to SME, growth capital. Even the banking industry was shying away from a slightly not very structured sector, which is the SME, and that's a completely different topic, of which regards why SMEs at that particular time were not as structured as the large corporates and higher risk, and viewed as higher risk. And since then, I've been with Union Capital. We've raised and operated 2 funds, the first SME-focused fund and the first impact investment fund in 2017, which was focused basically on providing restructuring capital to companies going into distress after the very difficult times that Egypt in particular and the entire region went through politically and economically since 2011. So this is me.
So you have such a body of work. So it's a privilege to be talking to you. And
thank you so much. Likewise.
I travel to Middle East a lot, and very rarely you find women of such a substance. So congratulations on the great work you have done. So that brings us to our first question. Sure. You have been doing a lot of stuff when it comes to working with the SMEs. Now it is a little bit more glamorous, right? We call it startups. So according to you, what impact do you see in the startup ecosystem due to COVID-19 and subsequent economic downturns and the lockdowns we are seeing across the world? So what impact do you see on a global level?
Okay, so there are many parts to that question. I understand that it's very easy to define SMEs as startups, but the reality is that not all SMEs are startups. So I'd like to separate the impact of the COVID-19 crisis or pandemic on the startups in one hand and on SMEs in the other. With regards to startups, there's going to be several levels of impact. The first thing is that it's going to affect their liquidity in particular, and this is very much linked to the type of business that they are doing. If they are in a line of business that is benefiting from this quarantine, from people staying at home, like something like home delivery, anything that connects people, e-learning, etc., they're going to flourish and they're going to benefit from it, and they're going to come out as winners, provided, of course, that they will not face any kind of liquidity or cash crisis. Because we very well know that one of the things that startup entrepreneurs like to do is that they fundraise very little amounts each round which is more or less exactly what they need. There is no cushion there. And for obvious reasons, entrepreneurs don't want to give up a lot of their company at a certain cycle of fundraising, because they always believe that the next round is going to be a more expensive, at a higher valuation, and will allow them to give up less and less of their companies. So they go to the market and they fundraise amounts that are exactly what they need. There is no cushion. So they tend to run out of cash much more quicker than the larger corporates that are operating, generating cash flow positive, etc. So this is one of the main things that's going to probably affect a lot of the startups. They may run out of cash quicker than expected. They may have to lay off some of their employees. They may have to invest into technology. So in some particular times, I personally believe that some of them will have to go back and revisit their business model. And this is one of the main challenges of startups. They have to always understand that their business model is under revision continuously. because they will be facing new challenges. And let's just face it, the COVID-19 is a completely novel challenge. This is something we've never seen before in our lifetime, and we're all learning how to face these challenges, how to deal with them, how to develop new tools and new techniques to be able to survive as a business, even as human beings with it. So some of these startups will need to go back, redefine their business model, and understand their strengths very well, their weaknesses, and what do they need to do. One of the other things that probably some of these startups will be facing if they're in the middle of negotiation of a term sheet or fundraising process in particular, they should expect that some of these investors, not all of their investors, will expect a lower valuation. And it's natural. I mean, markets are going down globally, multiples are going down, etc. And unless these startups are able to demonstrate alpha returns or alpha growth, etc., projected growth, they will have to accept lower valuation. And it also depends on their need to cash. How much can they survive until things start stabilize and investors are willing to look at some of these companies again. One of the main things as well that valuation will be going down is that a lot of the VCs themselves will be focused more on their portfolio and what's happening with their portfolio, and probably providing second and third round of financing to their own companies, to the companies that they already have stakes, instead of going out and seeking new investments. And they will be very picky if they're going to be approached by startups, and it's going to be undoubtedly a buyer's market, not a seller's market, for some time until things are clear, etc. The other thing that we should expect to see is that there's going to be a priority in terms of the sectors. Investors are going to be looking at certain and particular sectors, and I'm sure you've heard this from everyone. There are certain sectors that will be winners. There are certain sectors that will be losers. There are certain sectors and companies that need to redefine and find the opportunity within these challenges, and every challenge provides an opportunity. So there are opportunities there, and it depends on the entrepreneurs to be able to redefine the business model, find these opportunities, change their company and their approaches, and be able to move forward as things start progressing and changing. So basically that's it. As far as SMEs is concerned, that's a different story. And SMEs are operating companies and mostly cash flow positive. If they are successful SMEs. Again, some of the things that will apply to startups will apply to them. They will, it depends on which sectors they're operating and whether they're going to be affected or not. How cash rich are they? How willing will they be to either, do some certain restructuring in terms of the number of employees, the lines of business, etc., to be able to come out of this as winners. But we've seen globally that certain countries and certain governments have been very supportive of SMEs in particular, and startups as well. And they are currently defining certain programs that will cater to the needs of these startups and ensure that these companies will be able to survive until things start stabilizing once again, and that they will be remaining to operate. Personally, I think that we should expect, not immediately, but within 2020, a couple, not unlimited, but a wave of M&A. We will see larger corporations that are cash rich, buying some of these SMEs, in particular SMEs that are providing niche products, that are in industries and sectors that are winning from what's happening with the COVID-19, like the food services, etc., supermarkets, home delivery apps, etc., all of that. So we expect that. And the bad news is also that we expect that there's going to be certain companies that will need bailout and will be unable to honor their debt obligation and will be highly leveraged. And it's, I mean, not a lot of banks. The banks in Egypt are quite resilient, very cash rich, with high liquidity. They're not, they've got more deposits. Our loan to deposit ratio is around 60% in Egypt. So we've got room to extend more and more credit. But at the end of the day, it's a question of risk appetite and the willingness of these banks to take certain risks. They're going to be very selective with the risks they're taking with extending new leverage in particular. So we expect, and I personally expect that within Q3, Q4, provided that things continue with what we're seeing right now, and there are no surprises in the horizon, there is going to be a wave of M&A, and certain larger corporations will be fishing for medium-sized companies or even smaller-sized companies that will come out winners or will need certain bailout, and they will enter into negotiations with them for acquisitions.
Perfect. That's very clear insights about the global market. Thanks. Really appreciate. Something which I loved about this answer is that actually you've covered it very well holistically. And I really appreciate you differentiating the SME and the startup for the audience, because that's very, very critical. And generally what happens is that people who are not from the financial background, they unfortunately sometimes do that error of clubbing both of them. So awesome. Now that brings me a little bit of closer home for you. As you know that the Middle East and the North African economy itself is going through a lot of churn currently. Even before the COVID, there was a lot of things which was happening from Lebanon to UAE to Saudi, right? Absolutely. There were a lot of undercurrents. Now those undercurrents are coming on shore because of the dwindling petrol and crude price. At the same time, the food security becoming another issue, specifically when we talk about GCC countries, and a lot of investment for them would be on the side of taking care of supply chain of the food and agriculture. That gives a country like Egypt, which is having capability of producing a lot of food, right, a good opportunity. So I would like to understand from you that where do you see overall the Egyptian economy in short term, medium term, and long term? At the same time, which sectors do you see, right, would be doing a little bit better than others? Because tourism and agriculture is, I believe, is on a very strong footing because of COVID. But tourism is going to face a lot of challenge going forward, because I'm not going to buy my next ticket for a travel destination for sure for at least next year. So we would like to understand from you, someone who understands Egypt so well, that how do you see these contrarian situations?
Well, I mean, I think the tourism sector globally has been hit extremely hard. The airlines as well. So this time it's not specific to Egypt. Egypt has seen hits to tourism before due to terrorist attacks, due to several other reasons, due to political turmoil during the Arab Spring and post that. In fact, we've reached a record high in 2019 in terms of the revenues that have been recorded from the tourism sector in particular. This time it's on everybody. Everyone is affected. The global tourism industry globally is going to be affected. Hotels, companies that like Airbnb, stuff like that. And travel in particular, people, it's going to take some time for us to see the travel levels and the tourism levels that we have seen pre-COVID-19. Although I'm a little bit optimistic that than average, I always believe that human beings, resent fear and will eventually go back to their normal life. They cannot live like that forever. But until this time around, there's going to be also regulations. We expect to see a lot of regulations as countries start opening up their borders. So it's not going to be a human choice here, an individual human choice. It's going to be heavily regulated. Countries are not going to be opening up to avoid another wave of this pandemic. So tourism is definitely going to be affected. But if crisis has taught us anything, it's that usually at time of that like that, people go back to the basics. They go back to their basic needs. They go back to food. They go back to schooling. They go back to like their savings, financial services, all of that. So healthcare, of course, a big winner here, and medical supplies in particular. And we've seen the hikes in terms of the prices of masks, of latex gloves, etc., sanitizers, and chemical detergents. And another thing that I expect that will also start benefiting as factories start opening up and scaling up is industrial detergents. People will want to clean their factories, do heavy and deep sanitization to their factories, etc. So, and especially like the food chains, the restaurants, etc. So industrial detergents is also a subsector of chemical detergents that I expect will be doing quite well in the coming few months. I think honestly, to be very honest, we are still learning a lot about what's happening, and to be very specific is definitely not scientific, because this is something new to everyone. It's new to the healthcare professionals. It's new to the financiers. It's new to the entrepreneurs. It's new to the governments. It's new to everyone. So the reality is, we can forecast things. We can expect. But we can never be specific, and we can never really be able to pinpoint when are we getting out of this, what exactly is going to be happening, and what exactly, who's going to be the winners or who is going to be the losers here. But the main fact that we know is that the winners are usually people who will take some risks, not a lot of risks, who will see the trends before they become a trend, and who will be able to move with that trend and ahead of it. So whoever is in any sector who's be willing to be doing that is going to benefit from that. I mean, in Egypt here in particular, I've seen one of the Italian restaurants, and one of the things that they did is that they offer pizzas in their restaurants. So what they did is that they delivered pizzas to the houses, and each particular ingredient would be separate. So basically, it would be you assembling your own pizza at your own house. At your own convenience, and they're selling a lot of these pizzas, and probably they're making more money than they did competing as a regular pizzeria with so many other pizzerias just before the COVID. So it's things like that. People will be able to identify the opportunities, to identify the current and immediate need of the consumers, of their customers, their clients, etc., who will come out winning from this.
That's a great answer. I also agree with you that actually we are still understanding, right, what COVID is all about. Another challenge is that actually we cannot come to conclusion unless we see when it is going to stop. It can stop in a month or 6 months. We don't know. So I think
we have no idea.
Yeah, that's gonna be another challenge. We are also trying to work with few partners in Egypt in agriculture sector. So one of the question for me would be we are looking at a scenario where the food security is gonna be something, as you rightly said, that would be very critical for a lot of these nations. Do you think Egypt is well equipped when it comes to the food and the essential supplies?
I've been really impressed as an Egyptian citizen going to the supermarket since mid-March. I have not seen an empty shelf. I have not seen anything that I needed, my basic needs, that was not there. Whether detergents or the basic food supplies, etc. Everything was there in several of the supermarkets. The inventory was there, and I've had no complaints, and I've seen no complaints. But then again, this is. I live in the capital of Egypt, in Cairo, but I've heard of no complaints as well in other places in Egypt. In particular, that you have to understand that in Ramadan, in particular, Egyptians consume more than their average intake of food. Muslims, in particular, consume more than their average intake of food, and there's a lot of stocking of food that happens before, in particular, first week just before Ramadan, because people, try to adapt to the fasting and etc. So they don't want to go out on the first week of Ramadan to shop for food and groceries. They do that ahead of the week. So I think the system and the supply chain has been well tested. It's been tested over the course of the past 2 months. How long will this continue? I don't know, but a lot of the factories are operational. A lot of the farms are also operational, and the owners and the companies are taking strict measures to ensure the safety of the workers and all of that.
That's cool. So Egypt is in good shape. That's good to know about that. Now,
as far as food is concerned, yes.
Yes. No, see, I strongly believe currently we should just think about the food and anything which keeps us alive. The rest of the things can be taken care of later on.
Yeah.
So I strongly believe that. Now coming to something like, still further closer from your country to yourself and your organization. COVID is something which is just not a health issue or economical or business issue, also a personal crisis. Specifically when we talk about Middle East and where we are having a holy month, people love in the evening to get together and celebrate. Yes. Now the social distancing has led it to be something which is now becoming a personal crisis for a lot of people, right? Including the mental health of the people. I would like to understand from you what you as an individual and your organization are doing to keep yourself a step ahead of the challenges posed by COVID, and how do you see you coming or emerging as a better human being and as a better organization post-COVID?
Okay. So I think the first thing that COVID-19 has taught us is that we are much more linked to each other than we ever thought we were as human beings. And that what affects any particular human being is further as you can ever imagine, someone that you don't know somewhere that is affected and contracts this deadly disease. At first, when everyone was reading about it, you never thought it would come that close. You never thought that it would impact your life and possibly change it as much as it has. So that in particular, I think, to most of us is the first lesson. Is that what happens is further away from you as you think is very far away from you in reality affects you in some way or another. If it doesn't affect you immediately, eventually it will affect you. So possibly, I think it's collaboration. The world is now possibly praying and wishing for one thing: finding a cure for this pandemic, for this disease, possibly finding a vaccine, praying that less and less fatalities happen every day. So we are united and collaborating on one thing that possibly we haven't been doing for a very long time. In Canada, in Africa, in India, in Egypt, in Europe, in the United States, in China, in Singapore, everywhere in the world. There is one thing, unfortunately, it's a negative element, but it has in a way united us. And it shows, it's one common thing that we all share. So this is one thing that it has taught us. The second thing that I think that has had its impact on our company, and I believe the company and every company in the world will start thinking about is its investment in technology, and what is it willing to do and to put into technology to ensure the safety of its staff and employees. The second thing, its ability to operate remotely and not necessarily be present physically in so many places. I think the third thing that it has taught us is that, I mean, travel is extremely important, and human interaction is extremely important. And we like to attend these conferences, and we like to attend these physical meetings. And if you look at a lot of the corporations, whether large, small, startup corporations in the world, you will find a huge amount of expense compared to the size of the company that is spent on travel. And I think what COVID has taught us is that the reality is maybe we can save a lot of money, even save a lot of time in terms of commuting in countries that are that suffer from heavy traffic, like India and in Egypt. And we can have a lot of these meetings through these new applications, whether Microsoft Teams or Zoom, etc., and benefit from what technology can offer us, that will keep us still connected, that will allow us to share the thoughts and ideas and insights that we need to share without physically being present there, and saving a lot of time, effort, and possibly money as well. So I think that a lot of these companies, I'm hoping that a lot of these companies, my company is one of them, is going to be revising its budget for a lot of these travels, etc., into and moving it more into online meetings and online possibly conferences, etc. The third thing that I've noticed, and which I like a lot as well, is that a lot of the larger universities and the educational institutions are now providing very high quality programs and educational modules and diplomas to executives online that were quite unlikely going to be provided had not the COVID-19 happened. I mean, you would have probably needed to be physically there, interacting with your colleagues, your classmates, and professors, etc. So there's so much benefit to technology, and I think COVID has reinforced this kind of notion that there's so much that we haven't made use of, there's so much that we didn't benefit from, and possibly everyone will be revising that and looking at how much they would like to benefit from it. I mean, as a human being, I think, and as everyone else, COVID has taught us a lot about humility and our ability to understand that we cannot control everything. And as leaders in particular, is that you're faced with a situation, you have to deal with it. And you're faced with so many situations that are unexpected, challenges that you never ever thought about. And what you need to do is to think about the decisions that you need to take as you face that particular situation, and make sure that you're taking the right decisions, the ethical decisions, that will take your company and to all the stakeholders of your company to a better level, and to possibly the right direction of where you want to go, and the proper direction to where you want to head. So I mean, that in particular. And the final thing is that I think COVID has taught us a lot about appreciation. I mean, we've taken so many things for granted. The fact that we're able to shake hands with colleagues and to possibly hug senior members of your family, etc. These things that we've taken so much for granted, going to work in the morning, being able to grab a coffee from a Starbucks close by on your way to work, etc. All of these things that we've taken so much for granted over the course of our lives we are learning possibly now to appreciate them, because we have been denied all of these little things that we never noticed, and we never actually thought that at any particular point in time we will be denied any of these things. So I think everyone, and I'm hoping that everyone in particular will come out of this appreciating more the little things that we took for granted in the past.
That's also that very well articulated. In fact, like, I've been in digital transformation industry for past 20 years. I've seen more digitization in last 2 months than what I've seen in past 5 to 7 years.
Absolutely.
So that would be the way forward. I also believe with you. So that brings us to our the last section of this discussion. And my last question to you would be that if you have to advise a SME 3 things they should be doing today to be stronger once the COVID is over, so what those 3 things would be?
Okay. So I think the first thing that they need to do is to prioritize. They need to set priorities to where they want to go, to the resources that they already have, the directions that they want to take. They cannot do everything, especially in this particular challenging time. So they need to prioritize where they want to go, what they want to do, and what is the resources that they currently have, very realistically, that will allow them to achieve that in particular. The second thing I think is that they need to reflect. They need to understand what is happening around them, how the world is changing, and where are the challenges in that particular dynamic change, and where is the opportunities. And depending on the resources that they have identified, the priorities that they have set, where in particular, and do they see the opportunities that are relevant to them within all of these dynamic changes and new challenges. I mean, and the third thing that I would advise them is to act, because I think one of the main obstacles that SMEs in particular, and in some instances startups, but not all startups, but SMEs, is that they tend to act less than larger corporations. And this is why they remain, a majority of SMEs remain SMEs. They remain small and medium-sized companies and are unable to move to the next level. So once they prioritize, once they reflect and understand what's happening and what are the opportunities, they need to act upon it. And they need to act quickly and be willing to take risks, have confidence in their analysis, their understanding of their business, their understanding of the challenges that the world and their economies and countries are facing, and act upon it and deliver what they believe and what they've prioritized and their actual plans.
That's really awesome advice, and I strongly believe our audience who are having substantial part as a startup and SMEs would listen to what you are saying, and they'll come out victorious post-COVID.
Hopefully.
So Minoush, thanks a lot. It was a pleasure talking to you.
Thank you so much, Deepak. Thank you.
I've learned a lot personally, and I'm very sure that audience would also learn a lot. Have a great time.
Thank you so much.
Stay safe.
It's been a pleasure. Thank you. Thank you so much. Thank you. Bye. Thanks. Bye.